we could probably go ahead and get started. So hello, good morning, everybody. My name is Rachel Hawley, and I'm just going to provide a quick overview of our event for today, as well as some housekeeping items. So for today, we have a presentation covering insights on PPP loans from an accounting perspective, followed by a presentation on PPP loan forgiveness for nonprofits, and then wrapping it up with a presentation on ways to embrace communications to boost fundraising efforts. So before we begin, here are just a few housekeeping items. You are all muted, and that's just in order to cut down on any background noise. There's a copy of each presentation that can be found in the handout section. We will have times for questions throughout the presentation today, so at any point that you have any questions, feel free to submit them in the question box, and I will relay them to the presenters at that time. If your question is not addressed during today's time, our presenters will follow up with you after the event. If you are interested in obtaining CPE credits, there will be 3 keywords provided during today's webinar. I will be saying them after each presentation, as well as typing them then a chat box just so you can see them. Once our webinar is concluded, there will be a survey for you to provide any feedback as well as those keywords to obtain the CPE credits. So with all of that being said, I'm going to hand it over to our presenters at this time for an introduction. So Drew, if you want to start us off.
Okay. Hi there, everybody. Welcome to our homes. My name's Drew Long. As you can see, I'm a partner here in Springfield with Sikich. I have about 17 years of experience, and over the course of those 17 years, I've spent the majority of my time in the tax world, working with closely held businesses and their owners, just kind of staying abreast of tax regulations and getting in front of things and just helping people get the most out of the current tax landscape that we can. So just happy to speak with you today, and I'll turn it over to Terry.
Good morning, I'm Terry Taylor. I am a director in our Springfield office, and I work in the nonprofit and higher education sector, focused on audits, and we'll be talking a little bit with the accounting treatment this morning. I'll let Dave introduce himself.
Hi, my name is David Drennan. I'm a commercial lender here at United Community Bank in Springfield, Illinois. Spend most of my time lending, but also do a lot of our credit administration here for the bank, which got me tossed into doing the PPP loan stuff. And I've been in banking for about 14, 15 years now. Go ahead and turn it over to Kristen.
All right. Hello, I'm Kristen Ellertson. I'm an account supervisor at the Sikich Chicago office. I've been with Sikich for over 10 years now. And at Sikich Public Relations, we help brands and nonprofits elevate their brands and reputations. We do this through a mix of media relations, social media, and influencer relations. And today I'll talk to you about how communications can boost fundraising efforts.
Great. Okay. Terry, why don't you hit some of the goals for us, and then I think we'll dive right in.
Sure. So with the first part of our presentation, we want to talk a little bit about what the economic uncertainty for the applications for the PPP loan are, talk briefly about the GAAP accounting for PPP loan and forgiveness. What does that look like? And then for nonprofits, what are the tax implications that you might need to consider with your PPP loans?
Great. Okay, so I guess we'll just get started and go right into the economic uncertainty requirement. It's been a hot button topic, really since late April. But you know, to really understand the issue at hand, we kind of have to go back to when all this started, back in late March, early April. It seems like such a long time ago, really, but you know, this year's been so strange. It's so back in March, you know, as many of us realize that things were just completely up in the air. We knew that a lot of people were going into quarantine. Mostly everybody was going into quarantine. Nonprofits and for-profit businesses alike were really unsure of what this was going to mean for everybody. You know, were donors going to hold on to their funds? Were our donors going to have money? For our for-profit folks, what about our bids on jobs? Were they going to be held to a halt? Were contractors not going to be able to work on their jobs? You know, it was kind of a doomsday scenario. I mean, it was crazy. And in late March, Congress and the Senate passed the CARES Act, okay, and that brought about the PPP loan. And with the PPP loan came there was a limit on the amount of funds that were available. And once those funds were made available, it was kind of a race to the finish for David and his industry as to get, who's going to be able to distribute these funds the quickest, who needed what, how much could you get, what was the timeline for that, how could you get forgiveness? All of those questions were being asked at a very fast pace, and they were being asked quicker than the SBA could give guidance. So by about the 20th of April, a lot of people had PPP loans, and there still wasn't any guidance at that time. And a lot of people got really large PPP loans because the rules that were issued in late March made it relatively easy for people to get them. And if you guys and gals can remember, I mean, remember the Lakers story and Trader Joe's and other places like that they got large loans, and they started to get some negative press, and that started to get some political steam ahead of it. And so then in early May, the SBA started issuing frequently asked questions at that time. They started, kind of backpedaling a little bit on who gets the loan and so on and so forth. But the one thing that we have to remember is that at the time that a lot of us got these PPP loans, we had to certify that the current times were uncertain. Now, it was a very easy box to check at the time because I don't think that many of us, if we go back to the version of ourselves that existed in early April, knowing what we knew then, it was without question that we had some uncertainty, right? No one knew what our summer was going to look like and the way that was going to be presented to us. We didn't know if people were going to be going bankrupt in June. And so most people checked that box without thinking twice about it. But as the political climate changed a little bit, the SBA started changing their tune a little bit as well. So I think on this next slide here, there's some clarification on what, the frequently asked questions were. The SBA came out and essentially said that, you have to, in good faith, take into account your current business activity, which is an easy enough thing to do, assess your liquidity and see if it was sufficient to support ongoing operations. And so they kind of gave a safe harbor to everybody back at that time. If you recall, they gave us the opportunity to pay the funds back. I think the date was May 7th. Most people didn't, okay, but some people did. And as things kind of progressed, what the SBA essentially said was that, if you have a loan in excess of $2 million, then we're going to review your economic uncertainty at the time of the loan. So that presented us a challenge for us and our clients to document that accordingly. Okay, so to take a step back from that as well, another thing that happened at that time that people were a little bit nervous about was just the public knowledge of the loan. When these loans became public, I mean, in the State Journal Register here in Springfield, a lot of the loans over $1 million were in an article, okay? A lot of people didn't realize that was going to be happening at the time. So that created a lot of need, to go back and assess what the actual economic uncertainty was. We could sit in a room right now, I think, and just kind of, I don't know if reminiscing is the right word of what just happened to everybody, but just look at the different industries that were out there and what the impact was. I mean, if you're in the hospitality industry, you didn't have a good summer, most likely. I know a lot of restaurants have been persevering through things, but depending on where your restaurant is and what your business model was, that could have been a terrible summer. Other industries did great, and they got the loan. Okay, other industries that got large loans did great. Okay, so what we have to do now, for every industry, especially those over $2 million, is we need to assess here what the economic uncertainty was at the time you got the loan. Okay, and a lot of people are becoming very nervous. They're saying, I had a good summer, I did not have economic uncertainty. but that doesn't necessarily mean that there wasn't uncertainty at the time that loan came about. Okay, so you gotta, when you do this, we have to take a step back as an organization, and then just take a look at what that was at the time. What were the uncertainties at the time? What were your cash flow projections at that time? I'm sure, you know, a lot of our clients were doing that at the time. What did our working capital look like? What was the financing situation like for you as well? Were you running up against the top of your line of credit? Because as I'm sure Dave can attest to at that time, if the EIDL loan and the PPP loan were readily available at that time, then I don't think too many banks were going to be too keen on throwing money around town or around the area, you know, if these loans were available. And you know, most banks were uncertain as well. Okay, so that was an uncertainty. What about employees, key employees at that time? Everyone's situation is different. Everyone's home situation is different. You might have had key employees in your business that, you know, weren't going to be able to be as available to you as you probably would like. Childcare turned into be a huge issue, okay, for those who didn't have support, family support. And you know, certain people did get sick. I mean, and it's still continuing to this day. So, you know, there's a lot of uncertainties that are there. And if you sit back and you brainstorm, it's not too hard to document. And what we're doing as a firm, and we have a firm-wide effort to do this. We have a team set aside, and we are doing it on a regular basis right now for our clients that have larger loans, is that we're advising our clients through this process. Now, how does that look? Sometimes it's just a phone call, just like the conversation that I'm starting right now is similar to what I'm having quite often with a lot of my clients. But we're also taking it a bit further with some. We're helping, you know, actually draft the memo, and then we're reviewing that memo and just giving us some pointers on it, and maybe kicking some ideas back and forth. And we're also going all the way to actually drafting the language for you, and so that you can have it in your file with your approval, you know, and your responsibility, but drafting the language for you and just kind of communicating that, because with our audit team and with a lot of our consultants that we have on staff, you know, we just have more experience in documenting things in an effective and efficient manner. So that, you know, that is what we're doing as a firm on that front for the PPP loan for our clients. And, you know, we're going to be talking about the forgiveness process as well. So, you know, if you've got a loan over $2 million and you're starting that process, or maybe if you've even completed the process of getting your loan forgiven, it's going to be very important for you to get adequate documentation in your file for when the SBA comes knocking on the door to review that economic uncertainty. Okay, so I just wanted to throw that out there. It is going to be very important to you, and I think we're going to move forward now. If you know, and we'll have Q&A later if no one has any questions now. But I'm going to move forward now to Terry, and she's just going to talk a little bit about some of the GAAP accounting of, you know, problems or solutions that we have here for you. So let's go here to Terry.
Okay. Thanks, Drew. As Drew mentioned, I'm just going to briefly touch on the options for accounting for the PPP loans and the forgiveness for generally accepted accounting principles. Nonprofit organizations have two options for accounting for the PPP loans. One is to account for the loan as debt, and this is an option under the Accounting Standard Codification 470. But nonprofits also have the option to account for the loan as a conditional contribution. So you do have these two options to consider as to how do you want to account for the loan. You know, and when looking at that, a possible consideration might be in looking at, do you have debt covenants for other debt that you currently have, and how are items defined in those debt covenants? It's possible that classifying it as a refundable grant advance versus having it as a loan could impact those debt covenant calculations and ratios that you may have to calculate. So that's just one thing to consider in looking at which of the two treatment options do you want to move forward with. As far as accounting for the loan as debt, when you received the loan, you would have debited the cash and credited a loan payable. As you incurred the expenses for the qualifying expenses under the PPP loan, you would have just debited your appropriate expense accounts as you normally would when you made those payments, just as a typical transaction. And then once forgiveness occurs, and I'll touch just briefly on that in just a minute, but when forgiveness occurs at that point in time, then your entry would be that you would be debiting the PPP loan payable to remove that liability, and you would be crediting a gain on extinguishment of the debt. Now, one thing to keep in mind is that you might be in a situation where perhaps you're not getting all of your PPP loan forgiven, only a portion of it is. In that case, when you do have forgiveness, then that last entry would only be for the amount that is not required to be repaid. So just the forgiven amount, and then any amount that you might be having to repay would stay as a loan until that was paid off.
Okay.
If you take the option of accounting for the loan as a conditional contribution, the couple entries are similar to the loan situation. You're going to debit cash and credit the refundable advance. When you receive the funds, you would record that then as a refundable grant advance. And then again, just a typical transaction as you have paid the expenses, recording those in the appropriate expense accounts. And then when forgiveness occurs with the conditions being met as a conditional contribution, you would debit the refundable advance to remove that and then credit the government grant revenue. One thing I do want to mention briefly before we touch on when the forgiveness occurs under the accounting guidance is that with the conditional contribution, you'll see on here that do have that it becomes government grant revenue. One question that has come up with that from some organizations is, depending on the amount of the loan, we've received the question of, well, does that impact the single audit under the uniform guidance with the federal expenditures? The guidance was issued on that, and the PPP loan is not applicable for single audit purposes. So the PPP loan has no impact on your federal expenditures for the single audit threshold and does not appear on your scheduled expenditures of federal awards. That's from there.
Hey, Terry.
Yeah.
Can I ask a quick question?
Sure.
Have you heard any feedback from the financial institutions about how the debt method is going to affect loan covenants if we decide to go out?
I have not specifically heard feedback, but I have had that question come up as a consideration, and maybe something that Dave might be able to touch on as well in his portion of looking at that and going back to the documents for the existing debt to see how are covenants and ratios defined, to check to see, okay, what, if any, impact is this going to have recording it as a refundable grant advance versus a loan. I think in most situations, what we are seeing is that the treatment as a conditional contribution is what is being opted for.
Okay, so if you choose to treat it as a conditional contribution, you just have to have in your mind that more likely than not, the loan's going to be forgiven before you can do that? Contingent, like a contingency in that way?
Yeah, the condition is on that you'll meet the conditions to be able to recognize it, to actually have that contribution. So looking at, yeah, do you expect that you're ultimately going to meet those conditions to be able to recognize the revenue?
Okay, thanks.
No, thanks. So at when is the loan forgiven? For forgiveness of the loan, if you opt to treat it as debt, it would be when you're legally released. So when the SBA approves the forgiveness application would be when you are able to recognize that forgiveness and remove that liability. For forgiveness under the conditional contribution method, it looks at when are the conditions substantially met or explicitly waived by the lender. So looking at what are those conditions for the head count and so forth, and when have all of those conditions been substantially met or waived to be able to say you have earned that contribution, and that is when that would be recognized at that time. So, and then I think I'll turn it back over to Drew for a brief mention on the tax implications.
Sure. So on the tax side of things, for nonprofits, it's not as big of a deal unless, you have a taxable part of your organization. So kind of keep that in mind as I go through this. But the guidance the IRS has not issued any substantial authority at this point on how to handle PPP loans. But that being said, we have contacted the IRS and have been in communication with them and concerning what their current stance is on the issue right now. Initially, when this was passed, the PPP loan was not set to be taxable income, and it still is not taxable income. If you get a PPP loan and it gets forgiven, it's recognized as revenue. It does not get recognized as taxable revenue on the tax return. But effectively, unfortunately, it is taxable because the IRS right now has the position that states that if you reasonably expect, which kind of goes back to what Terry was saying on some of the GAAP treatment, if you reasonably expect for this loan to be forgiven, then you may not take a tax deduction for the expenses that are attributable to the forgiveness application. So if you get a $150,000 loan, you are able to use payroll to fill that void. You can't deduct that payroll of $150,000. That is going to be a surprise for a lot of people as we get through the planning season. We are already kind of having that conversation quite a bit. Now, there is a little bit of momentum in the House right now to get rid of that, but who knows what's going to happen, depending on how the election goes and things like that. I would like to think that somebody will come to the table and fix this for, our taxpayers. But right now, we need to be aware that it's not looking like it's going to be taxable. That's where we're at. So that's really the implications. Other implications can, if we have certain credits like the R&D credit, the QBI deduction and things like that, we do need to be mindful about which wages we use. We might want to kind of get away from using some of the wages for forgiveness if we can, just because we can't use these wages for both the R&D credit and certain other credits that are wage based on your annual for-profit tax returns. But right now, it's a pretty simple answer. We just don't know what they're going to do, and the IRS is of the position that it's just not a deductible expense for tax purposes. And I'm going to move on here. And Dave, are you next right now? I think you are, aren't you?
Yep.
Okay. We're going to go ahead and this will be a good time for questions while Dave kind of gets things fired up. If you'd like to ask any questions right now, Dave's got some slides I think he's going to share with us, and then we'll kind of get into the forgiveness area, which is that's probably the biggest issue right now. I think everyone's really chomping at the bit to get these things off their plate and get it forgiven.
So while we're giving a minute, just see if anybody's got any questions for Drew or Terry. I just wanted to say the first word for the CPE credits will be loan. First word is loan. And then I've also been made aware that maybe some of the handouts, you might not be able to open them for some reason. So I will send an email after this presentation with those handouts to everyone, just in case. So. I don't think we have any questions for Drew and Terry. So if you do have any questions later on, feel free to enter them in, but otherwise we'll pass it off to you, David.
Okay. Making sure I've got everybody can see my screen. All right.
Yep.
We'll jump right in. The forgiveness portion, then I'll kind of, as Drew mentioned, things are ever evolving in Congress, especially with an election looming. So I'll give a high-level overview of kind of the forgiveness process with the caveat that it could change at any minute for anything. Even when the PPP funds were coming out, I think we saw 3 versions of an application before they decided that was the one that needed to be submitted. So keep that in mind. I've got applications in here, I will say that. I always recommend if you're searching for an application, either use the SBA's website or the Treasury's website to find the most current version of the application you're looking for. With that, I'll go ahead and jump in to the forgiveness basics. Eligible cost or your payroll cost, and then your non-payroll costs, which could be rent payments, utility payments, mortgage interest payments. There is 2 covered periods they discuss, an 8-week and a 24-week. The 24-week came into play with the Flexibility Act that was passed June 5th. That allowed borrowers to elect to do a 24-week covered period, and they also released the alternate covered period for those on a biweekly or non-traditional payroll schedule. They could go off that alternate payroll covered period. Timing, this just kind of talks about your payroll timing. And again, like she just mentioned, all these slides will be available to go through. I'm not going to read them. Talks about the different covered period and your alternate payroll covered period, whether you elect the 8-week or 24-week. Kind of jumping ahead a little bit, but a lot of people have asked through the process, if I elect the 24-week covered period, but I exhaust my funds in 16 weeks, can I still apply? And the answer is yes. When you've exhausted those funds, you can still apply for forgiveness. Kind of how it works on our end, borrower would submit the application. The lender has 60 days from the time they receive a full application and documentation, submit it to the SBA, and then the SBA has 90 days to review it and make a remittance on that. What documentation is required? The nice part is this is kind of, again, this was as of 9/3, but it's already changed slightly. There is now 3 versions of the application: the 3508, the 3508EZ, and the 3508S, which was just released a week ago. The 3508S allows borrowers with PPP loans, 50,000 and under, to utilize that app, which is a very, very scaled down version of the original app. I'll touch on that here in a little bit. The nice part is each app does have instructions, and the instructions kind of give you definitions, what your lender will require, what you need to retain. It does a very good job of walking you through the app. But payroll, you'll need proof of payment, whether it's your payroll report, 941 if it falls within that quarter, bank statements, canceled checks, things like that. Non-payroll, proof of obligation, whether it's a lease agreement, canceled checks for your lease payment, a bank statement showing mortgage interest, payment for that mortgage, and then any utility payments that have been paid. On 3508, you need to submit the application along with your Schedule A and your full-time equivalent documentation. EZ is only going to require the full-time equivalent information. Also, each app does have a spot where you're going to check if that loan was $2 million or over. I think Drew mentioned they are going to track all those loans that are $2 million and over, and they will be under full review. Again, what documentation do we need for payroll? Kind of hit on that, but your payroll provider can provide documentation, any tax forms, payroll receipts, payment receipts, mortgage interest payments for your non-payroll, and amortization schedule and receipts, like I said, lease agreement receipts, and utility payments. There's 4 options the lender can make: approve in full. Hopefully that's what most people fall under. Approve in part, which means you've decreased your FTE or your payroll by 25%, and then you're only getting partial forgiveness. If the loan's denied, the lender doesn't agree that you've qualified for anything, and denied without prejudice. Kind of how the forgiveness platform has worked on our side. We're submitting these, and kind of give you a backside on ours. We submit it to an SBA portal where we can monitor, and I'll show you what that monitoring looks like on our side, but we can track all of our loans each bank has in their PPP portfolio as they kind of work through the SBA process. So the 3508 easy forgiveness application is probably going to be the most utilized if your loan is not under $50,000. Like I said, the 3508S was just released. You're allowed. I'm confident most borrowers will fall hopefully under this 3508 easy. It's a very scaled down version of the original app. If you hit those, there's 3 questions that it'll ask you to answer. And if you hit any one of those, you're allowed to use the 3508 EZ, mostly pertaining to you did not reduce your hourly wages of employees or your FTEs by 25% during a covered period or alternate period compared to 1/1 of 20 to 3/1 of 20. Kind of hit on this too. Can you submit your application for forgiveness before your 24-week period is ended? And the answer is yes. As soon as those funds are exhausted, you can begin preparing your application. EIDL, Economic Injury Disaster Loan. This is kind of a hot topic right now between banks and lobbying Congress. 2 versions of what happened with EIDL. EIDL provided it was a direct loan through SBA, and when everything was going 100 miles an hour in April and everybody was looking to get their hands on some funds, the borrowers were reaching out to get the EIDL. PPP had not quite kicked off yet, and banks were trying to get their arms around it. They decided to go ahead and do an EIDL advance up to $10,000. What they didn't say to banks, borrowers, or really anyone at the time was the EIDL was going to play into your PPP funds. So now what we're seeing on the forgiveness side is if a borrower received a $10,000 EIDL advance and a $100,000 PPP loan, then they will get $90,000 of that PPP loan paid off, and they still have to pay back that $10,000 EIDL advance. Again, it's kind of a hot topic right now because banks were unaware at the time that that was going to impact the PPP loans and what was forgiven, as well as the borrowers were unaware that that was going to be affected of what amount was being forgiven. So there'll be, I think, more to come on that, but as of current, if you apply for PPP forgiveness now and you have an EIDL advance, not the EIDL loan, but the EIDL advance, that will be netted out of your PPP forgiveness. Skip over. Sorry. So if you do have that $10,000 balance, let's say lingering, then that will be on between bank and borrower on the terms that were listed on the note you signed when you took your PPP loan on how that remaining amount gets paid back. It was before June 5th. It's over a 2-year period. After June 5th, it'll be over a 5-year period. This is kind of a snapshot of the forgiveness monitoring that we see in the SBA portal. Again, it shows the number of loans that are outstanding, which ones are pending validation, any under review, ones that have been fully approved, any not approved, partial approval, additional information needed from the lender, payment sent, and payment confirmation. On the ones I've seen that have been forgiven, all have been well under $100,000 at this point. I've never seen any large dollar amounts be forgiven. payments are sent fairly quickly, and we also are getting a letter that the borrower, we're getting the borrower, letting them know, here's the amount plus your interest that was forgiven on this, and that it is fully forgiven. Kind of general FAQs. Can you add documentation if something comes up that we can submit to the platform? Yes, as long as it's sitting in pending validation, we can still add stuff to it. Then the SBA does have 90 days to review these. Like I said, they opened it up August 10th. From everybody I've talked to, no large dollars have been sitting there. So while the SBA says they have 90 days to review, I would suspect that they can move that goalpost at any time. Just something to keep out there. SBA.gov PPP is a good resource for information. And that talks about kind of the EIDL advance that we just touched on. Now I'm going to go through kind of quickly each application form. I'm going to start with the longest and scale down to the slimmest. But this is the 3508 normal application that was first released. It has you fill out your information, your SBA PPP loan number. You'll notice this top information up here is going to be the same throughout. Your PPP loan amount, disbursement date, number of employees at loan, and number of employees at time of application. If you had an EIDL advance amount, they're only asking at that point for your advance amount. If you took an EIDL loan, you don't need to include that amount. That's a loan between borrower and SBA, and then your EIDL application number. Now, I do know the SBA does have record of all the EIDL loans, so if it is missed on the app, they are still netting that out when they send funds to the bank. Your payment schedule, and then your covered period. In your alternate covered period, you can list here if it's applicable. I will say this, they are looking for, when you list your covered period, they're looking for the 8 weeks you elected or the 24 weeks you elected. So if you exhausted funds in 16 weeks, still include that 24-week time frame for your covered period. Because I know I've seen some get kicked back because they didn't have dates that lined up. This kind of goes through your payroll and non-payroll cost and calculation. It walks you through step by step. Oh, sorry about that. Has you do some certifications and your signature of an authorized representative of the borrower or the borrower. Then this one goes on. It has a Schedule A and some tables to fill out on how you got your calculation. And then it has a Schedule A worksheet and your two tables as well as your FTE reduction. Again, this one has to be used if more than 25%. If you've experienced a 25% reduction in your FTE or your payroll.
Hey, Dave.
Yeah.
Yeah, to that point on the FTE reduction, which essentially means that you have until December 31st to restore your employment levels to February 15th levels, pre-pandemic levels. Okay. We're seeing quite frequently that, either businesses are reducing their workforce prior to December 31st, or may not even be around possibly by the end of the year, unfortunately, for some of these folks. Is there any kind of safe harbor? I'm reading that there is a safe harbor. If the current economic climate makes it impossible for you to maintain your FTE figures, it doesn't mean you're out of luck on forgiveness. Right.
It's just that kind of plays into which application.
Right.
Yep.
So our listeners just need to be mindful that the SBA wants this to be forgiven. It's the intent of the federal government to forgive these loans. you just got to dot your I's and cross your T's. So don't get nervous if you can't restore your employment levels by year end. That doesn't necessarily mean you're not going to be forgiven. We just got to communicate effectively and just make sure that we do the application correctly, right?
Right, 100%. Yeah, and I will note that we've solicited a lot of our borrowers already as far as getting the applications in, and it was kind of go, go, go right when they said we can take them, but actually a lot of people have taken a step back because we do have an election coming up next week, and as we've both said, things change they're very dynamic and fluid right now. So, yeah, this could all change, and they may just go down to the 3508 easy application for everybody. But yes, to your point, the SBA is doing everything they can to make sure these are forgiven, and as much as possible is forgiven.
Self-rental, have you gotten any questions on that? I know that that's becoming an issue.
I have not, no.
Okay. So be mindful if your current structure is set up into where you might have a related party lease in your organization where you have another LLC, or even maybe possibly like a disregarded entity where you cut a rent check, essentially to yourself, just left hand to right hand kind of transaction for a building that you own. Okay. The SBA is under the position now, because you got to recall that you can use rent as one of your qualifying expenses, but if it's self-rent, only the amount of rent that you send to yourself that is applicable to a third-party mortgage or loan can be used for forgiveness. So do keep that in mind. That has surprised a lot of people this summer as well.
Yeah, and with that, the non-payroll costs and payroll making up 60% of what you can use for forgiveness, you can use 100% of payroll.
Right.
Some people got the impression that, I can only use 60% of payroll and I have to make up 40%. No, if you have 100% of payroll, it's less documentation for you if you've covered it in that 24-week time frame. I think it's easier for most people just to use payroll at 100% then.
If you can do that, right.
Right. So it's not by any means set. They had 75% until the Flexibility Act came and reduced it to 60 and gave us that 24-week time frame. And I think the hope there was majority are still going to have payroll covering well over that 60%.
And another big hot topic item right now that just kind of recently got resolved is change in ownership. If one of our nonprofits or for-profit companies is in the middle of a material change in ownership, which is over 51%, if there's a merger that occurs between two organizations, which in hard economic times happens quite frequently. Up until really about a month ago, the SBA was saying, well, if you have more than 50% change in ownership, then we're going to call the loan. We're going to deem it to be in default. And that's held up a couple transactions that I've been working on. But subsequent to that, the SBA finally wised up really on that, and just is requiring that the proceeds of the loan that you have received, okay, prior to the closing date of the transaction, need to be put into escrow and stay there until forgiveness is received. And so just keep that in mind as well. Yep. Sorry to interrupt, Dave.
No, you're fine. No, that's good points. And that's the way this has gone since its inception. Is there's always other information out there, and there's so many points to cover, and you don't know if it's changed by the time you've covered it. So
right.
All good points. Thank you.
Welcome.
Then moving on to the 3508, this is kind of the instructions for that one. And like I said, the nice part is they kind of detail out here definitions of what you're going to see in that application and kind of how to handle each section. And then it'll also go into how you need to handle the calculations and summarize what's going in there. A lot to take in with 3508, and I think they got a ton of pushback when this was first released. That's why the 3508 EZ came out and ended up scaling that down. It's only 2 pages with no schedules. So again, this 3508 goes on time on how to do your schedules, how to fill out the tables, a lot of information if you're utilizing that app to complete. 3508 EZ, again, you'll see all the same information up top. It goes into a very scaled down version of the calculation, your payroll cost, mortgage interest payments, rent or lease payments, utility payments. It'll have you total those, your PPP loan amount. In this line 7, make sure you divide that payroll cost by 60, don't multiply it by 60. And then it'll have you put the lesser of lines 5, 6, and 7, which in most cases what we're seeing is the full forgiveness amount. Again, back page of this one has you certify how the funds were used, and it tests everything based off statute stuff came out with the CARES Act and Flexibility Act. Have a signature, sign and date. When you submit these, make sure they are getting all the certifications completed and they are getting signed. I've seen that hold up a few applications. Back page to that. And then it goes into the instructions. Again, very similar. It does kind of give you a nice 3-box check if any of these apply. At least one, you can use the 3508 EZ that I'm suspecting most people will fall under this application. Gives you definitions, what you're looking for, and then kind of line by line what to include as far as what qualifies. And then eligibility for forgiveness, what qualifies under there, what the covered periods are, and then it goes on to what needs to be submitted with your application as far as payroll documents and non-payroll documents. Kind of a heads up too, if you do end up scanning your packet to your lender, it does make it go a little smoother if you break down your application, payroll costs and non-payroll costs and different attachments. Just that's how they are getting uploaded to the SBA portal. And then this is the new one that just came out last week. It is Form 3508S, and you can see it's basically a 1-pager, information at the top, your certifications and your signature. Got the back page for your government monitoring. And then it's got the same, mouse is very touchy. Application talks about it. This was, you have a loan that's under $50,000 or under, you can utilize this. Now keep in mind, if you have multiple entities or affiliates, they're taking an aggregate. So if yours is 20, but you have multiple affiliates that make it $100,000 combined, you can't utilize this app. Goes into the definitions, eligibility costs, non-payroll and payroll, and then what needs to be submitted with your application to the lender or the bank, and what you need to retain. That's kind of a high-level overview of what we're seeing right now with the forgiveness process, what's out there, what the applications look like. A lot of information. So at this point, I'll kind of turn it over to questions and answer them the best I can.
Okay, so if you want to we'll give about a minute or so if you want to type in any questions that you may have in that question box, and I can relay it to the presenters. but at this time, the second CPE keyword is borrower. Second word is borrower. So we'll give about a minute and see if there's any questions.
Okay.
None at this time, so Kristen, you can go ahead and get started.
Awesome, thank you. So we'll talk about how to embrace communications to boost fundraising efforts, which is especially important now more than ever. A quick overview, Sikich Public Relations, we help build reputations. So we help companies raise brand awareness and promote products and services through a variety of different ways. Some are earned media coverage, social media promotion and influencer programs, event management and publicity, content creation, whether it's social media content, blog posts, white papers, internal communications, crisis communications, and media training. So first, let's talk about how you can begin to plan your communications with your donors. First, it's important to create powerful brand messaging to ensure you're making the right points that will really resonate with your donors. And you do this by creating a message map. It's a very static document. So once you create it, you can sometimes revisit it, but most of the time your messages will stay the same. One time we think is really important to revisit it is actually during this time, during the pandemic. So you can describe how the pandemic has impacted your organization in those key messages. Then outline your plans for 2021, talk about how the funds that the donors give you will be used. And also emphasize the importance of your organization's mission. Why is it important to give now, not any other time? So we created a mock key message map for the Greater Chicago Food Depository, one of the organizations that definitely needs funding right now. You can see the central message in the middle, supporting messages, and then points underneath each one. One example, we have taken on a more crucial role in our community in the wake of COVID-19. So once you have your messages set, it's important to be able to push them out and disseminate them appropriately. You can do this using a variety of different methods. We recommend social media, email, website, and in person when the time is right, and virtual events. If you only choose one method, you're really not getting your full donor base. We see that older donors prefer receiving physical mail still, whereas younger donors are more likely to turn to social media to see your messages. And each channel has to have different messages. So you need to tailor your messages appropriately to match the channel and use imagery to amplify your messages for each of these channels. So for example, we have this coloring book that's for a live animal rescue, a rescue organization for animals in Chicago. On the website, it's a more serious tone. It talks about the impact of the pandemic on animals and talks about why it's important to donate now in the form of this coloring book. In email, you can see it's a really visual color. It's a very bright color, kind of catches the eye. And on social media, it's a more shorter, fun, lighthearted message, and we recommend using those different tones in each. Okay, so now that you have your foundational messages set and you have your channels set on where you'd like to reach your donors, it's time to create or to think of more creative ways to reach your donor base and to reach more potential book donors. So one way you can do this is through media opportunities, through media relations. It's a great way to seek coverage to spread the word on your organization and its mission. Media relations provides this third-party endorsement that it's a really good cause and a worthy cause. You can see the example on Big Brother, Big Sister faces new challenges during COVID. Proactively communicate your work through the media outlet. Promote upcoming virtual events, show its impact on the community, and also you can comment on relevant issues in the news if there's a pressing need for your organization right now. you'll be using during these interviews, or during media relations, you'll probably have to do some interviews, and these interviews will speak directly to your key audience. We recommend addressing the question asked, bridging back to your key messages, which were described in that message map, communicate what you want the reporter, and through the reporter, your audience to know. So you'll see that Big Brothers Big Sisters in Southern California is looking for volunteers, so that was the message that they really wanted to push out. You want to treat reporters well to earn a callback. So you need to understand that reporters have a need for innovation. They want to report on, trends, non-traditional paths to success, best practices, and also news you can use. It's very interesting that for people to hear something and think, oh wow, yeah, I could use that fact. So reporters are always looking for that type of information, whether it's advice, insights, facts, stats, benchmarks. And when you're participating in these interviews, it's important to respect the reporter's time. You should be sure to prepare for each interview and be sure to respond really thoroughly to each one of the reporter's questions. Because if you do that, the whole goal is to earn the callback, right? So the reporter will want to interview as a resource in the future, and then you can get even more exposure for your organization. Okay, so beyond traditional media, it's important to use social media to reach your new donors through their various networks and friends and other channels that they have. So you can encourage super fans to amplify their messages on their own channel by sharing your own content that they can then reuse. So you'll see the Big Brothers Big Sisters telethon has a really nice visual that super fans could then share and say, hey, I'm participating in this, why don't you support? Okay. You can offer incentives to encourage engagement with these super fans. And also it's important to interact with the content that your super fans are putting out. So like the post from the organization's account, have some type of a comment, encourage them to keep doing it, because if they see that you're interacting, it shows that you care and they're more likely to do it even more often. Okay, so in addition to working with super fans, you can also boost posts on social media to reach even more potential donors. You can do this in really targeted ways now, which is great. So you can choose your objective, whether it's getting people to click through the organization's website or you're focusing on conversion, so you do want those donations. And you can pick which one would be most appropriate. And then you select an audience based on location, demographics, interests, and behaviors. And you can get so granular with these, it's great. So if you wanted to host a wine night for women in Chicago as a fundraiser, virtual fundraiser, you could select Chicago as a location. You can target women ages 21 to 35. And you could also target those who like wine. So you're really narrowing your audience and increasing your chances for success there. Finally, you'll want to set a budget. It's important to set this budget because you can set a really strict budget, which is again really great. And then the social channel will tell you your predicted ROI and reach based on the audience you want and the budget you select. So here you can see Big Brothers Big Sisters did sponsor a post for September as Big Brothers Big Sisters month. Okay, so traditional and social media are great ways to reach donors and communicate your messages, but it's also important to know that virtual events are probably here to stay. Even if we do return to in-person events at some point, there will be a virtual component. There's no secret the pandemic has severely impacted fundraising, but there is kind of a glimmer of hope, some positive stats that we see. 73% of nonprofits canceled events in March. This resulted in losses of $644 million. So it's very staggering. But in mid-May, the Women's Philanthropy Institute had a survey, and it showed most U.S. households did engage in charitable activity in response to the pandemic. So almost 1/3 gave directly to causes, and nearly half, especially millennials, gave indirectly. And indirectly means that they were ordering takeout, supporting local restaurants, paying their hairdresser, or dog walker, even if they didn't necessarily have those services or have a need for those services at the time. And the virtual events can help recoup any losses and provide new ways for current and new donors to participate and get to know your organization. And once states reopen, virtual events can accommodate those who cannot or are more hesitant to attend these in-person events. So we really do see a combination of both in-person and virtual in the future. Okay, so finally, annual events that are in person for philanthropies are a well-oiled machine. They're easy to plan. It's almost down to a science. Nonprofits have this down pat, that it's not a challenge for them. But if you switch to virtual, there's a lot to consider. This is new for everyone, right? People want details in advance. Potential attendees want to know if they can log in and join the event on their phone. Do they need to show their video? Could they just join on the phone without the video component? They want to know that they just want to be comfortable, basically. So you need to put in extra time for extra planning and communication to really allow for the smooth transition to virtual. If you're going to be hosting a virtual gala, you need to think through basically every minute of that gala. Do you want to have 3 hours of speeches? You just need to make sure you adapt appropriately. Finally, you want to consider the quantity of events. People can join from, supposedly most of the time, from anywhere, join from their living room. They don't need to get all dressed up. So there's a potential that they could be attending more of your events. Because there's no venue fees, no meal fees associated with these virtual events, typically, an organization could host more frequent, smaller virtual events compared to one big in-person event, which is great. You could reach more people, but you really need to think through and be strategic about how you do that. So finally, you can get creative. I mean, that's always a really good solution when trying to attract people to different events. We see a lot of virtual 5Ks. You see someone with a baby stroller participating in something like that. At DoorDash gala dinners, we've seen that in the past, and that can create this excitement around the virtual event that's just as exciting as an in-person event. We also see more frequent fundraisers where the goal is to just reach new potential donors and invite them to book clubs and trivia nights with the nonprofit, which is kind of a cool way to get in front of them and attract new people. And then finally, the Women's Endowment Fund in Akron, Ohio, decided to switch their gala from in-person to virtual, and they had meals and a bottle of wine delivered to each attendee, which kind of had a fun component. When talking about 5Ks, it's a really kind of common way to think about raising funds. You can do some type of a virtual training element with the trainer online. You can have a hashtag and share photos of people running. So there's just a lot of potential there that we see for virtual events, and we do believe that they are here to stay. So it's important to do them correctly. And that's all. So if there's any questions, please let me know. I'm happy to answer any.
Okay, so we'll give a minute to see if anybody has any questions. And then just to also include here, the last CPE question or keyword will be boost. The last keyword is boost. And it looks like we do have a question here.
Okay, the question, I'll go ahead and just read the question. And David, it looks like a question for you. It says, our PPP lender is not currently accepting forgiveness applications due to the lack of clarity of SBA rules and regulations about the forgiveness process. Is this common throughout the lending industry?
Yes, I would say so. Again, we were lagging on ours to see what was coming out and started slowly taking them. and then that kind of reversed, and then said we were taking them, and borrowers kind of slowed wanting to submit them to see what was going to come. So yeah, I would say that's very common right now, that a lot of people are just very uncertain on if anything's going to change with the tax codes that Drew talked about. The applications are going to change. There for a long time, the rumor mill was circulating that loans 150,000 and under were going to be a blanket forgiveness. You know, that's where I think the 3508S came out of. They're still talking about maybe a certain group just has to sign an affidavit, which is very close to the 3508S. So to answer the question, yeah, it's very common that banks are slowly taking these, but still very unsure on what's going to change.
And also keep in mind too, most of us, our 24-week period is ended in October. We've got 10 months to submit our application from that point. So,
Correct.
you know, it's not the end of the world right now not to apply. I have noticed that, you know, and no, I mean, that's just the way things are right now, but a lot of the larger banks are a little slower in accepting applications than some of the community banks have been. That's just been my experience.
Yep. And most, I think the common theme across everybody's PPP portfolio is about 80 to 90% roughly are 100,000 and under, but only make up 15% of that total dollar amount.
Mm-hmm.
So it's a sure volume game when you talk about getting the 50,000 under through, collecting the app, submitting it. I mean, while it's a scaled down version, basically a signed affidavit, and the onus on the bank is to make sure we looked at the documentation, not so much the calculation on the new app. But again, it becomes a resources game to get them all input and sent through.
Great. Thanks, Dave.
Yep.
Okay.
All right.
Any others?
I don't think there's any other questions at this time. So with that, I just wanted to thank everybody for attending today. Thank you to our presenters for your time and your presentations. Just a brief reminder to our attendees, once you exit out of this webinar, that survey will be prompted. And so at that time, if you can provide us with any of your feedback, as well as if you're looking to get the CPE credits, putting in those keywords for the CPE at that time. So thank you, everybody. And I hope you have a great rest of your week.
Thank you, Rachel.
Thank you,
you.
everyone.
Thank you.
Yeah.